Welcome to Market Matters. This is Charlotte Chong, and of course, I am Kusu Chuang. Companies in the news: SCH Group Berhad. They closed the day unchanged at 20.5 cents. Charlotte. They are a quarry maker. They have been doing business in the industry since the early 80s. What they do is they supply general industrial products for various industries, but mainly for quarries, and they tie into the construction business.
No, they actually produce their products to several countries, Singapore, Indonesia as well. But the news is Managing Director, Deputy Chairman Lau Mong Ling. She actually said that revenue may decline 20% in the current financial year ending August 21st, 2016 this year, on property slowdown, of course, and also construction as well. And she said property slowdown already had an impact of SCH's business.
Yeah, but hopefully with the government spending on construction and high ticket items, for example, the Pan Borneo Highway, that could actually support SCH's business. Of course, on a year-to-date basis, SCH have seen their shares drop by nearly 10% on a year-to-date basis, and that I think has led JF Apex Research to downgrade the company to a hold with a target price of just 23 cents.
Now let's look at its earnings and the fourth quarter, August 15 this year. Net loss actually was at 700,000 ringgit. Revenue down 42.3% to 9.6 million ringgit. Just now you mentioned about shares drop about 9.5% year to date. I think it's sort of buffered by its construction activity because this company is not purely doing property segment. If you see property related company, they probably got pretty badly hit by the economy right now.
But the slowdown, but of course they also do. They also supply to the mining industry, and as evidenced by the Red Seas at Kuantan and bauxite mining, there's some activity going on there. So, in terms of where JF Apex is looking at the business, they also say that the financial results for SCH have been significantly below full-year estimates due to the unexpected sales drop and allowance for slow-moving inventories incurred in the quarter. Of course, if you're carrying quarry equipment and you don't sell them, you're carrying them on your balance sheet, and that's not very good for your earnings.
So what JF Apex research said is SCH could face an uphill task to boost its sales in the immediate term and the current challenging economic outlook. And it thinks the group will continue to chalk up unimpressive sales in the coming next few quarters.
Yeah, but note also that their target price of 23 cents is still 2.5 cents higher than where SCH shares are currently. So to summarize, Managing Director and Deputy Chairman of SCH, Lau Mong Ling, he said that revenue may decline 20% in fiscal 2016. That's a revenue warning right there. Secondly, the property slowdown has already had an impact on SCH's business. And thirdly, they are hopeful, however, that the Pan Borneo Highway could support SCH's business. Let's switch along to Broker's Call, and it's KLCC Staple REIT. Of course, they own various assets around the Klang Valley, but also namely Petronas Twin Towers as well as Mandarin Oriental. They closed the day unchanged at $7, and the news is that the company actually reported fourth quarter earnings recently. Revenue was flat on the quarter at 347 million ringgit, but net profit was up by 44% to 623 million. On a full year basis, Charlotte, revenue was still flat, just down by 1% to 1.34 billion ringgit, but net profits are up by 21% to 938 million ringgit. So it's all to play for KLCC Staple REIT.
Right, today we are looking at two research reports, one by Maybank, another one by Kenanga. I'll just cover Maybank. Maybank maintained a buy call in this company with unchanged target price of 7 ringgit 90 cents. They remain positive on this REIT near to mid-term outlook as earnings are still largely backed by offices' long-term and triple net leases.
Yeah, but what is interesting about KLCC Staple is because a lot of their clients in the Twin Towers are actually in the oil and gas sector. I know because I used to work there. They actually see that as a boon to KLCC Staple because if business is so bad, they're not going to move anywhere. They're going to just stick to where they're renting and then just sign on for another few more years. And that's why their long-term leases are pretty stable.
But what if KLCC just increase their rental rates?
Oh, that's all contractualized, right? Because you can't just, they're usually done on a rolling 3-year basis. So it is where it is. In terms of where the other research houses are concerned, Kenanga Research have called the market perform with a target price of $7.13 on KLCC Stapled. They went to the second half results briefing as well last Friday. They came away from the briefing feeling neutral on their prospects. The retail segment is doing all right with a positive reversion phenomenon. The office segment is stable, But the hotel segment, because Mandarin Oriental has been undergoing renovation, that's a drag on the top line, down 1% on a year-to-date, year-on-year basis.
Talking about Mandarin Oriental, actually Maybank expect, it actually saw occupancy fell to 48% from 63%, but it expect recovery in Mandarin Oriental as well, and Maybank continues to like KLCCP for its resilient earnings from office assets, visible pipeline of new assets as well.
Yeah, that's right. They've actually renewed their 10% placement mandate that's valid up to just April of this year. So they only got a couple months left on that viewpoint. They're trying to raise, it's actually meant to raise as much as 1.2 billion ringgit for potential asset acquisition. And of course, the speculation is that they may target assets within the KL Golden Triangle. But nothing has happened yet, so we are watching, the analysts are watching to wait and see.
Let's look at the financial results for fourth quarter ended December 15. Profit actually up 44.3% to 623.3 million ringgit. Revenue up 0.03% to 347.1 million ringgit.
Okay, so to summarize, Q4 net profit for KLCC Stable Property REIT up 21% to 938 million ringgit. Maybank has maintained the buy with an unchanged target price of $7.90. Kenanga, meanwhile, have had a market perform with a target price of $7.13 on KLCC Stable Property REIT. To get more stuff on the Edge Markets, go to the website at theedgemarkets.com or pick up the copy of the Financial Daily or the Edge Weekly at all good, sensible newsstands near you. Thank you for watching. Good night and good luck.